Welcome to The Explainer. There's a quiet revolution happening right now inside your bank. It's being powered by artificial intelligence, and honestly, it's changing everything about how we save, spend, and borrow money. So, what does this AI-powered future actually look like for you? Let's dive in. Okay, let's start with a number. $2 trillion. That's what a Citigroup report predicts AI could add to the banking industry's profits by 2028. Yeah, calling this just another tech trend doesn't even begin to cover it. This is more like a financial earthquake, and the stakes could not be higher. But here's the catch. This gold rush is creating a massive divide. You've got some banks that are just leaping into the future, while others are getting left in the dust. And that brings up a really personal question, right? Where does your bank fit into all this? And what does it actually mean for your money? So let's break that down. A $2 trillion promise. I mean, where does a number like that even come from? Well, it's not just about, cutting a few costs here and there. This is about AI fundamentally rewiring the entire industry, from the little chatbot you talk to all the way to the very core of how major financial decisions get made. And this is a point that the consulting firm Ergomania really hammers home. The real gap isn't just between banks that have some AI and those that don't. It's between the ones that are just kind of dabbling in a few isolated projects and the ones that are transforming their entire organization. The winners get it. They've realized AI's true value isn't just automating old stuff. It's creating entirely new ways for you and for their employees to interact with money.
Okay, so that brings up the big question, right? Who's actually winning this race? And more importantly, what's their secret sauce? Well, it turns out the leaders are all following a pretty similar playbook.
Well, if you look at a report from Tier Sheet, they've actually mapped this whole thing out, and it's pretty clear there's a hierarchy, you could say. Right at the top, you've got the comprehensive leaders, like JP Morgan Chase. These guys are going all in, enterprise-wide. Then you have players who are amazing in specific areas, like American Express, which just dominates fraud detection with its AI. So it shows you this isn't a race with just one winner, but a whole multi-tiered evolution. So how do they do it? What's the playbook? Well, according to McKinsey, the winners all follow this clear four-part strategy. And the key thing to get here is that it's a holistic approach, not just a bunch of random projects. It all starts with a big, bank-wide vision that goes way beyond just cutting costs. From there, it's about transforming whole processes, building smart AI systems that actually work together, and getting all the right people, from the business side to the tech side, all on the same team. And believe me, you can see this playbook in action all over the place. This isn't just some theory on a slide. We're talking real, tangible value. Look at JP Morgan Chase saving 360,000 work hours a year with just one tool. Or Bank of America's Erica Assistant handling over 2 billion customer interactions. Or think about American Express holding the top spot in fraud prevention for 14 straight years because of its AI. That's what success looks like. Okay, I know what you're thinking. This is all great for the big banks, but let's make this personal. How does any of this high-level corporate strategy stuff actually impact you and your bank account? Let's start with something we can all relate to: security. The old way of spotting fraud was, well, it was clumsy. It was based on these rigid, simple rules, like flag any transaction over $500. And you know how frustrating that is, right? It blocks your legitimate purchases all the time. Now, the AI approach, it's like a different universe. It's dynamic. It looks at hundreds of things in real time: your location, the time of day, what you usually buy, to spot patterns that are actually suspicious. It protects your money way more accurately. And it goes so far beyond just security. AI is pushing us toward what people are calling hyper-personalization. So imagine this. Your bank doesn't just react, it anticipates. It sees your spending habits and proactively offers advice. Or it notices you're looking at houses online and suggests the perfect mortgage product. It's about creating a bank that actually knows you. And behind the scenes, it means better, fairer loan decisions, with data showing AI can cut default rates by 20%. And this might be one of the most powerful impacts of all. A study from the U.S. Census Bureau found that AI helps banks break down these old information barriers. By analyzing data in a smarter way, they can actually start lending to people in more remote or underserved communities, people who might have been totally overlooked by the old models. It's a huge step toward greater financial inclusion. All right, so if AI is this amazing, all-powerful tool, why isn't every single bank a hyper-personalized, fraud-busting machine by now? Well, this is where we get our reality check, because the path to actually implementing this stuff is absolutely filled with major hurdles. And data from an American banker survey shows us exactly what's holding them back. And what's really interesting here is look how close these top challenges are. It's not one single thing. At number one, you've got legacy systems. 40% of banks say their old tech just can't handle modern AI. But breathing down its neck are regulation, proving the ROI, and finding qualified people. It's this tangled mess of problems.
So let's dig in a little deeper. The technology problem? You've got these ancient mainframe systems from decades ago trying to run algorithms that need massive computing power. The regulation problem? It's a complex maze of data privacy laws that are different everywhere you look. And then there's maybe the biggest hurdle of all, the human element, the trust gap. Over 60% of people still feel a human understands their needs better than an algorithm does.
But once you solve for the tech and you figure out the rules, you're left with an even deeper, more fundamental question we have to ask ourselves. Can a machine, designed by humans, ever be truly fair?
And this gets at a really tough problem called algorithmic bias. Here's the gist. An AI is only as good as the data you feed it. And if that historical data is filled with the same biases humans have had for decades, well, guess what? The AI learns those biases, and sometimes it even makes them worse. This can lead to really unfair outcomes in critical areas, like who gets approved for a loan. It's the central ethical puzzle everyone in this space is wrestling with.
Which brings us to our final section, and to the heart of the matter, really, the ultimate balancing act: innovation versus trust. How does the entire banking industry harness the incredible power of AI without completely breaking the foundation of trust that the whole system is built on? Look, at the end of the day, this can't just be about building faster, shinier tech. The real challenge, the true test, is putting all of this incredible power in the service of human-centered banking. The institutions that are going to win in the long run are the ones that remember technology is just a tool. The real goal is serving people better. And so I want to leave you with this thought. AI isn't coming anymore. It's here. It's quickly becoming the new operating system for finance. So the question for all of us, for banks, for regulators, and for us as customers, is how do we steer this revolution? How do we make sure the system we build is not just more efficient and profitable, but also more equitable, more inclusive, and ultimately more trustworthy for every single one of us?